Is Robinhood a fundamentally better company than SOFI? You see, Robinhood has actually fallen 47% from all-time highs, but even though they're currently trading around $39 to $40, they're actually still up 4x from over a year ago. Now, if you have followed my channel for some time, you perhaps have an idea of where I'm going with this, but if you're new to the channel, welcome. Now, I've been, talking about SOFI over the last couple of months, and there was a period not too long ago where the narrative around these two companies was that Robinhood was about to eat SOFI's lunch. In this video, we're going to talk about whether or not that is true by identifying some key metrics to help us better understand Robinhood's business in order to compare it with what SOFI does, ultimately helping us to determine whether or not Robinhood has the potential to reach their stated goal of becoming a global financial ecosystem. But as always, potential is a dangerous word, so let's dive in. Now, this video will be the first in a series where I look at some companies that you have asked me to in the last video. Now, I'll be very honest here, some of the companies that were given to me in the comments are small biotech companies or companies in very niche fields that I don't really have much expertise in, and so to pretend otherwise and to give you my analysis and thoughts about those companies would be pretty disingenuous. So, if I can't get to some of these companies, at least you understand why. But from the list of companies that people asked me about in the comments, there are 3 or 4 that really stood out. So apart from Robinhood, I think one of the companies that was asked about, I actually hold it in my parents' portfolio, and I want to actually talk about that in another video. And another 2 companies, they are in my good ideas shortlist where I keep companies which has perhaps impressed me, but I haven't really had the time to build up a fundamental thesis on them. And so when it comes to Robinhood, I think the disclaimer over here is that I haven't actually used the product. Now, it's actually similar in the sense that I haven't used SOFI's product either, but a large part of SOFI's revenue actually comes from the lending segment, which is part of the loan market. And this is a segment of the financial market that I do understand. However, when it comes to Robinhood, because I think the moat or the reason why a lot of people were initially attracted to Robinhood was the ease of use, and their UI and UX is actually very good. So I can't say that I have a first-hand experience with how good the product is, but what I can do is to actually let the numbers do the talking for me. So I'm going into this with the assumption that the UI and UX is actually good. That is what is, building the moat for Robinhood, getting customers on board. And if that is really the case, I think we can definitely see it in the numbers. Now, with that said, I do have a vested interest in this company because they're planning to move to Singapore in the second half of 2025, if I'm not mistaken. And from what I've seen online, with people talking about it, I'll be keen to consolidate my assets over there. But I think that depends on the number of features and how quickly they roll out their entire offering in Singapore. You see, I remember when I started investing, I had to pay $25 to $30 in commissions just to execute the trade. And during that time, there was no such thing as a commission-free trade. There was no Weibo or Moomoo or Tiger around in Singapore. I was on this platform called Poems, which was under Phillips Capital, and Phillips Capital is basically just a small financial services company in Singapore, and I'm pretty sure I think none of you outside of Singapore would have heard about them. And all other investment platforms provided by the bank, well, they suck in terms of their UI and UX. So I do understand this aspect of Robinhood's moat where their UI and UX is an important part of their business and is something that can actually attract especially newer investors onto their platform. And as these newer investors come onto the platform and grow with the platform, that is how Robinhood actually monetize their user base. And so I'll elaborate on this a little bit later because I think my perspective when it comes to UI and UX is slightly different from what I've seen people talk about online so far. So when I look into a company, I try to understand, what they do. Now with SOFI, I take a look at, their vision and their mission statement. It's quite straightforward. SOFI wants to help people get their money right. And if you look at the trajectory of the company and the culture of the company, it really fits that vision, right? The products that SOFI has rolled out so far, the way the entire company is being managed in a slightly more conservative manner, it actually fits that vision. And with Robinhood, this is actually slightly different. You can see it on their website. They tell you that the main vision for Robinhood is to democratize finance. Now, right at this moment, I just want to ask you to leave a comment below because I'm pretty sure it's not just me, right? I mean, I can't be the only one that feel like everyone in the world is trying to use this word democratize. That has been like the in word in the last couple of years. And everyone is trying to democratize something. At least that's the feeling I get. It's a little bit overused. Now, I'm not saying that this is a bad thing, but I do believe in clear communication. And I think for the majority of us in the finance space, it's a no-brainer, democratizing finance, what it means. But I've actually tested this on a couple of my friends, and they relate the word democratize to democracy, which is not entirely wrong, but it's not exactly the message that Robinhood is trying to bring across. So if you're new to understanding this company and what Robinhood actually does, and if I could actually break this down for you, Robinhood's mission is to actually make finance accessible for everyone. It doesn't sound catchy for sure, but it tells us exactly what they do. And I'm bringing this up because this is important for me to understand the company's culture, to understand the decision-making framework that the company is using, and to help us in a sense, take a look and understand management's decision with a more objective view. So Robinhood is actually a brokerage, right? They allow people to invest on their platform, so their investors can actually participate in things like options trading, fractional trading, right? Even trading of futures and crypto, which is definitely helped by the recent crypto bull cycle we find ourselves in. Now, beyond that, I do believe that Robinhood have other features that they added onto their platform beyond being a brokerage. They participate in things like securities lending. They also allow people to open retirement accounts. Now, they even offer a credit card, and that is the Robinhood Gold card, which earns a 3% cashback in all categories. Now, I'm actually quite impressed with how they have made the unit economics work, at least for now. I think that there are still more stress tests to come along the way to actually see the feasibility of this over a long term. Now, I wasn't following the company as closely during that time when, this card was actually being released, but I remember they had someone from Nubank who came over that helped to scale this, and he was successful in doing the same with Nubank. And so because of that, I do believe that this product will be successful in the long run. I think I just want to see how it actually performs and the default rates and stuff like that, especially as we go through a recession. So this is something that I'm going to be keeping an eye on moving forward. Now, as they begin to roll out these different initiatives in the US, I think we can see them actually start to grow their total number of funded accounts. I think at the start of the year, in Q4 of 2023, the total number of funded accounts on their platform was 23.4 million, and they basically ended the year in Q4 of 2024 with 25.3 million total funded accounts. Now, they have also started to roll out some of these products in the UK, and they're also targeting global expansion, which is why I'm very happy to say that they're actually coming to Singapore so that I can finally test the products. And like I said, first impressions, really fantastic company, fantastic product. And if the experience really matches up with what, has been said in the finance space over the last couple of years, I'll be happy to consolidate some of my holdings into this company. And so when it comes to analyzing and understanding new companies, I think one of the things I like to do is to understand the total addressable market of the company. And it's only when I started to dig a little bit deeper into the total addressable market in front of Robinhood that I start to realize that my previous understanding of the company was actually fairly limited, which is why I wasn't too interested in the company, because previously I only saw them as a brokerage, which was the mistake. You see, their vision is to democratize finance, and yes, they started as a brokerage, but over the last couple of years, they have expanded into so many other verticals that if you are just looking at the total addressable market, it's basically as far as they're able to expand within the finance space. But if you're just focusing purely in the brokerage space, that itself is really a huge market, although it's growing slowly. Now, the brokerage market is around $2.2 trillion today, and that is expected to grow at a 7.8% CAGR all the way to the end of the decade, where this market will be worth around a $3 trillion market. And I've seen, posts like this on X when I'm doing my research on Robinhood, where people talk about how they are shifting funds from other larger financial institutions into Robinhood because of the things that are being offered through their Gold membership. So, currently when I did the math and a little bit of Googling, there are around 62% of all US citizens invested in the stock market. Now, I don't know how this works in the US, so you can let me know down below. But in Singapore, I believe this number is around 48% of all Singaporeans are invested in the stock market. However, I do believe that part of this 48% of people in Singapore that they invest through various financial advisory firms where they just buy into certain funds. They might not transact directly on the stock market. So yes, although their money is in the market, they may not actually use the actual brokerage. So I don't really know how that is in the US, but I'm just assuming 62% of all US citizens, use some form of brokerage. So I did a little bit of digging, and I realized that in terms of their competitors, or in terms of the larger financial institutions, which are their competitors, Charles Schwab have around 36.9 million accounts and Fidelity around 45 million accounts. Now, these two companies have a much longer history than Robinhood, and so therefore for Robinhood to have over 25 million accounts in 2025 is actually pretty impressive. Now, I feel that when I look at Robinhood, I don't think they will eventually become a bank and have a banking charter. I believe that would actually put too many regulations onto them and affect the company's culture of innovation, which is what I believe we are seeing happen with SOFI. And beyond the total addressable market, which is, like I said, pretty much all of finance, however much they depend, or however much they actually want to expand into, I think just if you're looking at the Robinhood Gold Card itself, just by adding the credit card markets into the brokerage markets, that alone is another huge market. And so to me, Robinhood ticks all the boxes for an innovative company going after a large total addressable market. Now let's try to understand what exactly can go right and wrong for Robinhood. Now, I'm someone that actually believes that the UI and UX does form a moat for the company, right? If a product has a good user interface, brings about good user experience, then it becomes a moat for the company, but not in the way that most people are talking about. You see, when people actually say that the UI and UX is a moat for the company, I think they get a lot of pushback from people who say that, this is not a moat because this can be easily replicated by another company. But I would actually beg to differ, not because I don't think it can be easily replicated, but I think the reason why, the user interface, the user experience becomes such a moat for the company goes a little bit deeper than just what the customer feels. And so my question is this: if all these people are saying that, the moat is just the UI and UX, it's just the whole feeling that the customer has, why isn't that happening right now? Why are companies not changing their UI and UX in order to compete with Robinhood? And that is why I actually do think that, when I understand Robinhood and when I understand SOFI's platform, I understand how these two things are, working together to actually help Robinhood grow their moat. Now, what do I mean over here? Now, you see, many of these large financial institutions that Robinhood is competing against, if you have watched my previous SOFI video on the tech platform, you would have realized that, Galileo actually told us that for many of these bigger financial institutions, the technology that is running their back end, that is powering their entire system, is so archaic and outdated that it cannot be fully integrated into their customer-facing component of the app. And so in simple English, what this means is that, all these larger financial institutions, they can make their app look nicer, they can make their app look more modern, and the customer actually feels better on the app, using the app, everything feels a little bit more smooth, but it doesn't fundamentally change the way the user interacts with the app. And so I do believe that when someone says the UI and UX is the moat, we are not talking about the feeling that is created within the consumer, because ultimately, what makes customers stay on the app is not just the feeling, when I swipe around in the app, it feels smooth, but it's the ability to continue accessing the same products and services seamlessly with incrementally better experiences. And that can come in the form of processing speeds, and that can come in the way of data being presented in a way to help consumers optimize their finance. And it's not easy for the larger financial institutions to do that. And so, the feeling that the customer feels from having a modern platform, from feeling that everything works very smoothly, that itself is not the moat, but it is the tech that is required to deliver the UI and UX that becomes the moat for Robinhood. You see, because the way I look at it, right, the UI and the UX, these are just delivery mediums, conduits of the underlying products and services that the company has for the user. Now, what Robinhood has been able to do is that the moat that Robinhood has is that their entire ecosystem is built on the way where any back-end changes is being seamlessly translated into an updated UI and UX. And this allows them to move much faster than their competitors. Whereas any changes in the UI and UX, especially in the large financial institutions, I think a lot of times it is, fairly cosmetic because the tech in the back end doesn't provide the same level of support. Now, I'm going to give you an example of this over here. If you take the event contracts that Robinhood has rolled out recently, for instance, just one update and you can see it in your Robinhood app. And the reason for that is that because the technology that powers their platform allows them to create that whole back end and then immediately translate that into the user interface. However, for many of the large financial institutions, they are unable to do that because they know how to do what Robinhood does. does. But the problem is the tech that is powering their back end is not a good fit for the tech that is powering their customer facing component. And because of that, the lack of integration between their back end and their customer facing component means that the rollout takes longer. And this actually brings me to my next point. Another aspect of Robinhood that strengthens the moat is the diversification of their revenue. Now, maybe it's still too early, like I said, to call it a moat, but it definitely makes their source of revenue a little bit more robust. Now, I think previously, we have seen in 2022 that they are very affected by market conditions, and I think to a large extent, they still are, because if you look at the total transaction revenues as a percentage of overall revenues, this still stands at a slightly over 60% as of Q4 of 2024. Now, the introduction of the Robinhood Gold card, as well as things like, event contracts, these are the small little services and products that Robinhood adds onto their platform that brings in other forms of revenue that is not tied directly to the stock market. And so event contracts, I know many people have a little bit of debate and concerns about this, about whether or not this is gambling and whether or not they want the Robinhood brand to be associated with something like this. Now, in Singapore, the Chinese have a saying, they basically say, 有买有希望, 没买没希望. Now, translated to English, what this means is that if I buy, I have a chance. But if I don't buy, I do not have a chance. And the context surrounding this statement is usually talking about buying 4D and Toto, which is basically like lottery tickets, right? And people in Singapore actually do this on a weekly basis rather than choose to invest. That's a pet peeve of mine, which I will not get into right now. But I sort of understand the concept of, people just buying hope. Now, when I actually talk to a lot of these people, especially even during economic downturns, people still choose to go and buy all these 4D tickets once a week and things like that, because it can be $5 to $10. And exactly like what that saying is trying to tell us, what these people are doing when they are putting $5, $10 into the lottery ticket is buying hope, the hope that allows them to break free of the rat race, and that is what gives them the psychological motivation to keep working. So I'm not saying I agree with this or my values align with this, but this is something I've observed, and I'm trying to say that, perhaps when they introduce these kind of products onto the platform during economic cycles and during economic downturns when people are less likely to invest in the stock market, this is something that can make up for, some of the hit in revenue that we see over there. And I think, like I said, values-wise, I think that's a totally different conversation, but I think it's a fair use of their money as long as they're doing it in a controlled manner. Now, it'll be interesting to see how these event contracts are being traded on the platform, even during an economic downturn in the US. At least from, friends that I know that do buy this every single week. Like I said, to them, for them, it's just $5 to $10. Buy a little hope that, they get a small little windfall that gives them the motivation to keep working and eventually, hopefully, break out of the rat race. So I see this as a way of, allowing people to buy hope. Whether or not you agree with that premise is a completely different manner, but it is a way that they are diversifying away from their main revenue source of transaction revenue from the stock market. Now, I think additionally, Robinhood Gold makes the platform way more sticky. I know they recently have a 2% match on fresh deposits, and I believe that these deposits have to stay in the account for 5 years. Otherwise, I'm not too sure exactly what are I wouldn't say consequences, but there are probably some terms and conditions, right? That if you take out your money, you might not get a full 2% and things like that. I didn't go and read into too much detail, but I know that, there's a 2% match for fresh deposits, and the deposits have to stay in the account for 5 years. If you choose to take it out, I think there might be, some terms and conditions that are tagged to that. And the value that they provide for the customer through Robinhood Gold is tremendous. I think they receive things like higher interest on cash sweep, higher match on their IRA contributions, which is their retirement accounts, bigger instant deposits, being able to invest using margins, lower fees and commissions, etc. And all this for just around $5 per month. So I think it really makes sense for the customer. But at the same time, as the customer interacts more with the Robinhood platform, that generates a greater LTV per customer for Robinhood. And so to me, it's not just about the subscription revenue that Robinhood Gold brings in. Now, if you take a look at the subscription revenue, I believe that they mentioned during their last earning calls that the subscription revenue came in at around $170 million. So this is actually quite impressive. That's around 5% of their entire revenue for the year. But I think beyond that, I think what really helps to drive revenues for Robinhood is the depth of the relationship that this customer, this Gold member actually builds with Robinhood over time. And to me, the depth of the interaction of the consumer with Robinhood's platform is directly proportional to the quality of Robinhood's execution that drives the easy cross-sell into different products. Now, honestly, as a SOFI shareholder, Robinhood's execution makes me jealous. I understand the nuance between the two companies, but I'm definitely a sucker for great product execution, and the velocity at which Robinhood is releasing products and the way that they're engaging their consumer has really caught my eye. Now, if you take a look at this left-hand column, this is all the products and services that they have released in 2024. Now, in just Q4 alone, they released crypto transfers in Europe, they announced Robinhood Legend, index options at Robinhood, futures at Robinhood, options trading and margins in the UK, and even event contracts using the presidential election. Now, they also introduced tax lots on Robinhood, and I think they had Ethereum staking and earnings match in the UK. Now, if you are a SOFI shareholder like me, I think it is at this point in time where I started to feel a tinge of jealousy with how fast Robinhood is executing, how fast they're innovating and launching new products that make SOFI looks like they're standing still. But when I take a step back, it actually makes me extremely bullish for SOFI. Because if you remember, towards the end of last year, SOFI actually announced that they have migrated their entire banking core over to Galileo. And that means, if you look at Robinhood's example, that SOFI now has the ability to roll out products with equal velocity as what Robinhood is doing. I think previously they were constrained by technology, but now that is not the case moving forward. Now, whether or not they will choose to do that is a totally different matter entirely. And I think that has largely to do with the culture of the company and the different visions that the company has set out, which is why I do believe that they are going after slightly different audiences with an overlap, but it is not mutually exclusive. It doesn't mean that if a consumer is on SOFI's platform, they will never use Robinhood, and the reverse is true. And so for me, I think what this means is that, SOFI now has the ability to roll out products and services as fast as what Robinhood is doing, and this is something that we have to pay attention to as SOFI shareholders. But back to Robinhood. So like I said, personally, I think what Robinhood Gold does is it helps them to build the moat. Robinhood Gold itself is not the moat, but when offered in conjunction with the other products, it makes the entire offering very sticky. Now, going into 2025, Robinhood's focus will still be on scaling members, especially their Gold subscribers, because I do believe that the level of interaction per Gold subscriber with their platform is more valuable than just a normal user. Now, if you look at the most recent numbers, they're currently at around 2.6 million Gold subscribers, with a total of 25.3 million accounts, which puts this number at around a 10.4% penetration. Now, in their recent earnings call, Robinhood basically told us that this penetration in the more recent cohorts has been over 30%, and so that means we should see this number tick up over 30% in time to come. Now, they're planning to reinvest into the company in 2025 to continue driving profitable growth. Now, I like how they give actual guidance for their expenses, so we expect them to increase marketing spend by around $100 million this year, which puts their marketing spend slightly north of $350 million, and adjusted operating expenses as well as stock-based compensation to be in the region of $2 to $2.1 billion. And so just to touch on a couple of things I find pretty exciting is the pace at which they're scaling their platform and adding new features. Now, during the fourth quarter earnings call, that they basically spoke about how Robinhood Legend has become a $50 million business, as well as index option becoming a $15 million business, which means that these two businesses that were launched 2 months ago generated them $65 million. And even if they don't continue to accelerate the pace of growth for these platforms and only grow at this pace, which is around $32 million per month of combined revenue, these two products alone would bring in around $390 million of revenue in 2025, which is more than 10% of their overall revenue in 2024. Now, on top of this, there are plans to continue increasing the adoption of Robinhood Gold Card, as well as expand into other areas of the finance sector, including advisory. And if you add on to all of this, there are plans to expand their crypto business. It really makes 2025 a very exciting year for Robinhood. Now, I've always said that you can't really take management's word at face value. I mean, unless of course they have a good track record, but you still have to test it against tangible metrics that you can track over the long term so that you can determine the success of management. management's strategy. Now, on a high level, I think we see revenue for Robinhood come in at a 58% year-over-year growth to at around $3 billion, and adjusted EBITDA up over 160% at $1.4 billion with EBITDA margins of 48%. Now, they also tell us that 80% of the top line growth is actually dropping down to the bottom line, which means there are around 80% incremental margins, and in terms of their EPS, that came in at $1.56. But one thing to note is that they actually have some tax credits that came in this quarter, which actually boosted their net income. On top of this, Gold subscription actually brought in $170 million of annualized revenue, and I guess we expect to see this, more or less at least 3x over the next couple of years, because if Robinhood is telling us that the attach rate for the Gold membership is north of 30%, then this $170 million should grow in tandem with that number. Now, I've said earlier, and I think this is important to understand, that the Gold subscriber, the revenue that comes from this subscription does diversify the revenue sources that Robinhood receives, because people are not just going to cancel their Gold subscription because the market is weak. And the reason for that is because the Gold subscription offers more to the consumer beyond however they interact with the stock market. This impacts their cash sweep. This impacts things like their IRA contributions and things like that. So although they may transact less on their platform, I do believe the revenue from the subscription will cushion some of that impact, as well as the interaction of the Gold member with the other products and services on Robinhood's platform will also help to cushion some of this impact. Now, if you take a look at some of these metrics over here, I think you can see while there was some cyclicality definitely in the business back in 2022 during the bear market, I think in general it is safe to say that Robinhood's entire business is trending in the right direction. Now, this graph over here basically shows you the total number of funded accounts that they have, as well as assets under custody per account. Now, what you are observing over here, if you look at the blue bars, you can see that the total number of accounts is increasing, although the pace of increase might not be that fast. Now, I think we have explained earlier on that, in comparison to older companies such as Charles Schwab and Fidelity, Robinhood is at a pretty healthy level. Of course, there is still market share for them to gain. There is still room for them to grow in terms of the total number of accounts. But because this number is already so big, right, the growth here might not be as quick. But what is really increasing rapidly is this orange line that you see over here. The assets per account is increasing rapidly, and I think that is a testament to Robinhood's ability to cross-sell their existing customer and to increase the rate of product adoption among their current users. And so to me, in terms of growth, what this shows me is that they actually have two levers of growth. One is to increase the number of customers, funded customers on their platform, and the second is by the adoption of products and services by all their existing customers. Now, if you can look over here, the total number of Gold subscribers over the last 2 years have actually grown steadily from just over 1 million Gold members to now 2.6 million members. And what that means in terms of the percentage of adoption as well as percentage of Gold members to the total number of funded accounts, that basically grew from 4% all the way to 10.4%. And we already know that the target here is to get this number north of 30%, because in the current cohort of Gold subscribers back in the fourth quarter of 2024, the attach rate for the Gold subscribers is north of 30%. Now, if we move on and look at the top line, we can actually see the revenue breakdown over here. The green bar represents other revenue, and this includes their Gold subscription. Now, the orange bar represents net interest revenue, and the blue bar represents transaction-based revenue. So these are the three main revenue drivers for Robinhood, and they've built out these different sources of revenue so that they become less cyclical. But I guess if you consider the nature of Robinhood's business of being a brokerage, I think you can't totally eliminate cyclicality from their revenue, and to me this is just a feature and not a bug, and something as an investor you have to be comfortable with. But you can see that in terms of overall revenue as well as revenue per member, both metrics are increasing in tandem in a very healthy manner. Now, I found this interesting, and I've never thought of looking at SOFI this way, and maybe I should, but they measure themselves according to the rule of 40. And I think you can see that during the downturn and during the market that we had, in the bear market that we had in 2022, they were not able to operate at the rule of 40, which is the basically adjusted EBITDA margin added onto the rate of revenue growth. But they have been able to do so in the last 8 quarters consecutively, and they have turned the business around. So this will be interesting to see whether or not they can maintain this level of growth if we do enter another bear market after adding on all these other products products and features to make their revenue less cyclical. Now, if you take a look at the most recent statistics, you can actually see that Robinhood is still on the right track to grow revenues and profitability in 2025. Now, funded customer accounts came in at 25.6 million. Now, the total number of assets under custody came in at $187 billion. Net deposits were $4.8 billion and their cash sweep stood at around $26.2 billion. Now, at this point in time, even after the decline, if you were to compare Robinhood with some of its peers on a price to sales basis, Robinhood is trading at around a 12 times price to sales, which is rather pricey. But if you take their revenue growth into consideration, Robinhood is currently growing revenues at around a 58% year-over-year pace. Now, if you compare this to some of their peers like Affirm growing at 46%, or SOFI at 27 to 28%, or even Charles Schwab growing at only 3% year over year, then perhaps you can see why they are trading at such a high multiple. Now, I think what we are seeing today in the markets, if what we are seeing today is really just a 10, 12, even 15% correction, and the market continues to trend upwards in the second half of 2025, then I think there is a high chance that they can maintain this level of growth. However, Robinhood themselves actually guided for a double-digit growth, and to me that is rather ambiguous because double-digit can be 11% and it also can be 99%. Both of them are double-digit. But I think what is interesting for me is that if this, is not a market correction and this is the start of a new bear market, then I think it's interesting for me to see how Robinhood's business would actually perform in this new bear market over here. Because of course, I know their business is strong. I don't think that there's any risk of bankruptcy and things like that in the bear market. But I think what would actually be interesting to see is to see how they perform in the bear market after adding on so many other products and services that are supposed to diversify their revenue source and to, in a sense, reduce the cyclicality in their revenues. And I think when I look at Robinhood, I see this as a company that is a complete opposite from SOFI. I think SOFI, to me, is a consistent grower in different macro environments that we have seen. Now, over the last couple of years, with the high interest rate environment where lending companies are not supposed to perform as well, SOFI pivoted their entire business and continued to maintain growth. Whereas Robinhood's business model has cyclicality built in, and I think it's harder for them to reduce that cyclicality. Now, objectively, I do think Robinhood is, perhaps priced for perfection. And if we were to see this level of volatility in the markets, I wouldn't be surprised to see valuations compress even further. Now, while we are on this topic, I want to take some time to point out a couple of things that I think about when I do my valuation. And this is a more qualitative aspect of the valuation process that can be quite subjective. And so to bring my point across, I'm going to be comparing three companies, right? Firstly, Robinhood growing at 58% year over year, trading at 12 times sales. Affirm growing at 46% year over year, but trading at 5 times sales. And SOFI growing at around 28% year over year, trading at 4.7 times sales. Now, if you are to just look purely at the numbers, it would seem as like Affirm is actually the best deal out of the three, right? It's only growing 10% slower than Robinhood, whereas it's trading at nearly less than half of the multiple of what Robinhood is trading at. So it would seem on the surface, if you're just looking at numbers, that Affirm is the best deal. But is that really the case? You see, at the moment with Robinhood, I think what we are buying extremely high growth. The thing is, the growth numbers here are prone to huge swings during different macro conditions. With Affirm, like I said, they may look cheap from the outside, but I think what we are seeing recently in the news with Walmart choosing to go with Klarna over Affirm signals two things to me. Now, firstly, Walmart is a rather big client, I would say, for Affirm, amounting up to around 5% of their overall gross merchandise volume. Now, if you take away 5% of their GMV, and let's say they hope to grow at a 30% year over year, what that means is that the remaining companies that make up the 95% of their GMV would now need to grow at a 36% year over year pace instead of a 30% year over year pace in order for them to meet the original target. And if you look at the data that we are seeing with the consumer right now, I'm not sure if we are going to get an increase in consumer spend. And so I'm not sure where they can find this growth. And so because of that, I think that, there are short-term headwinds for sure when it comes to Affirm, and the price actually reflects that, or the multiple reflects that. And secondly, I think this also shows that there is a lack of moat around Affirm's product. If one of your biggest clients can just make the switch like this, right? And I think, to me, this multiple that Affirm is currently trading at is reflecting the uncertainty of their future growth rates. rates, because markets are ultimately future or forward looking, right? Because once you lose this big customer, the people are not sure whether or not you can continue to put up the same growth numbers. So if you're telling me that a firm is trading at 5 times sales, I would much rather buy SOFI, who, although they are growing slower and perhaps in terms of execution, they may not be at the same level of Robinhood, but what they are and what they have proven to be over time is that under different macro conditions, when other businesses completely fail during those conditions, they're able to adapt, they're able to pivot, and to put up strong growth numbers. And so, although you may say that they're not as innovative as Robinhood, their management team is forward thinking, they're nimble, and they're able to adapt their business under different macro conditions. So if Robinhood is currently growing their revenues at 58% year over year and trading at 12 times price to sales, with all this cyclicality built in, I think SOFI, although they're growing at half the pace of Robinhood, because they have less cyclicality and with the sturdiness, with the robustness of their business, I think they do deserve a premium over where they are currently trading, and the market just haven't really caught up to what SOFI has been doing. And so that is why out of these three companies, I would feel more comfortable buying Robinhood and SOFI over a firm right now. So I think if you look at Robinhood, beyond the price to sales, they are trading at a 29 times forward PE, and that is pretty decent if you consider that the entire market is trading at around 26 times PE. So on a relative basis, that is a pretty decent valuation, and they have beaten their EPS targets 3 out of the last 4 quarters. But I think what is really interesting and where the opportunities could really lie is in the future guidance, because you have analysts projecting out EPS of $1.51 in 2026, but $1.41 in 2025. And so this only reflects a 7% growth between 2025 and 2026. Now I might have to dig a little bit deeper to understand the reasoning behind these projections, but it seems way too low for me. Because if you take away their tax credits, right, you get EPS of around $1.04 or $1.05 in 2024. So for them to reach $1.41 in 2025 requires them to grow their earnings per share at 34% year over year. Therefore, I think if they are able to grow their earnings at 34% year over year this year, I think it's quite unlikely for them to only grow their earnings at 7% going into 2026, especially if they continue to buy back shares. And so because of that, from this perspective, Robinhood does seem cheap. But I guess this is also indicative of the concerns that I've shared earlier, because they are a great company with fantastic executions. I think people are just not sure how to price in all the different moving pieces and the possible cyclicality that we are going to see in markets moving forward if we do get a bear market. And so if we are able to do all of this through a proper valuation process, that could be potential alpha for us if we are able to catch on to the 2026 growth before the market actually catches on. So you let me know down below if you want an even more detailed valuation, and I'll see you in the next one.